All right. Thanks everyone for tuning in. We're going to check out the markets. People are talking about like, oh, the market's going down, blah, blah, blah. It's like down markets are easier for traders to make money in than up markets because markets go down faster than they go up. So when you get this volatility like we've been having, it presents opportunities. All the talk was about the job numbers on Friday, which was yesterday, and how many downward revisions there have been. And, I'm a big fan of conspiracy theories, but it's like, how could these people be so wrong for so long? I mean, is it being like the White House is like, you got to make it look better, blah, blah, blah. But anyway, whatever. All right. So I just saw this before we go into the markets. Invasive, fast growing plant threatens homes. This plant grows 3 feet a week. The Japanese knotweed. Yeah, we got them around here. All right. Anyway, you're probably not here to talk about Japanese knotweeds. You probably want to hear about the market. So let's go see what the hell is going on. And those of you who have been following along know that this move is not a surprise. People tell me, they're like, Mark, you make these great market calls. Like, what do you do? Do you got some secret system or whatever? And it's like, no, I just watch the market and I let the market tell me what to do. The market is always right. People are wrong. Analysts are wrong. Politicians are wrong. Wow, look at this weak action, man. So let me explain why I am not surprised that this big move lower happened. All right. So anyway, we get up to resistance at a level that was resistance before, which is a very common thing. Markets run into resistance a lot of times at levels that were resistance before because there were people who bought back here who started losing money like the next day. And they're like, whatever. If this thing ever gets back up to my price and I get out at break even, I'm going to. All right. So whatever. We get up there, we solve. Now, this is why I think this big move on Friday was not a surprise. We got in the S&P, we got below this important price level, right? Resistance becomes support. Notice how, despite this big move down, there was no rebound. And this is what as traders this is as traders what we refer to as bad action. It's not something that's quantifiable, but if you get a huge move down and there's no rebound, it tells you the buyers are still on the sidelines. They're not coming in yet. And we get another refill of a gap here, right? It's like we gapped down, we gapped up. One of the main reasons why we get support is because we have people who sold to go to try to buy their shares back at the price they sold them at after they go higher and come back. When you rip through price levels like this really quickly, like we did, if it didn't trade at the level, no one could have sold it, right? Pretty obvious. So it's not unusual. Fast move down one way, coming back the other way, you get the fast move. So basically, SPY refilled the gap. So I am not at the least bit surprised, right? The weak action, the thing that should have told you that it was pretty probable that a pretty big down move was coming was after this sell-off, there was no reversal. And the level that had been resistance became resistance again. All right. So anyway, I know people are like, "Oh, hindsight's 2020, blah blah blah." All you got to do is just tune in to Stock Market Jobber. It's like I've been doing this for a long time, longer than I care to admit. And I've learned that the most important thing is just to let the market talk to you and don't have an ego. And like, so here's our tech sector. This is actually pretty precise. When I do a textbook one day, if textbooks even exist anymore, I mean, look at this. This is the technology sector. This is worth, I don't even know how many trillions and trillions of dollars. And look how precise the action has been around this 210 level. Let me go make sure. All right, we're going to make that 210 just to make it perfect. Okay, resistance back here, becomes support here, becomes support here. Now, here's one of the keys that kind of gave us some insight that the market was going to make a big move down. We got below this important level, okay, and we didn't rebound back above it. After 2 or 3 days, 3 days actually, because that was the opening price on Friday, the tech sector did not get back above that important price level. So this is what we call bad action. You can't quantify it, but believe me, if you do this enough and if you join our community and follow along, I'm going to teach you how markets really work and not all this like stupid stuff you see out there. Oh, make 5,000% in 2 hours, blah blah blah. If I can make 5,000% in 2 hours, I would sign up for that class wherever it is. But here we see the same gap down, gap back up. Not surprising. Looks to me like the market's going lower. Here's an interesting thing to look at. Notice how this peak or this high over here formed at a lower price than this high. So when that happens, there's a good chance. It just shows you as time is going by, the sellers are getting more aggressive, right? Notice how when the market's going up, the peaks form at higher levels. Well, when the market starts to go down, the peaks form at lower levels. So anyway, tech looks weak. Looks like it's going to continue to go down. The other two big sectors are healthcare and financials that we should look at. Now, here's another thing where we got to just talk about action. It's kind of hard to quantify, right? So healthcare is going up because money's coming out of tech, and the people that are selling tech are like, where the hell should I put my money? So we had this last gasp here. It's almost like a capitulation to the upside on Wednesday. I'm just going to put this here to make this a little easier for you to see. The the ETF opened here. It got all the way up to there. And by the close, it came all the way back down. And it actually closed at a lower price than it opened at. So, maybe this thing has a name, inverse sledgehammer. I mean, I would call it a reversal day. But sometimes when markets change leadership from bulls to bears or bears to bulls, it takes place over kind of an extended period of time. And that might show up as like a rounded top or a rounded bottom. But sometimes the leadership can change in one day. And this is a really good example of it. Once again, if I was writing a textbook, and maybe one day I will, but probably more like a text video. Let's just think about what happened. Opens there, gets all the way up there. All of a sudden, the sellers are like, "That's it. We're coming into the market in full force." They push the buyers all the way back, and sure enough, we get two big down days. And I think we continue. I would be looking for, probably around 151. I mean, it doesn't sound like a lot. It's about 154, but this is a sector we're looking at. We're not looking at a particular stock. So this is just a really interesting trading day here. Call it whatever you want. The inverse sledgehammer. Same thing happened the day before, but just not to the same degree. All right, now we're going to go look at the financial sector. And again, going back to all these job numbers, it's like, wow, look at that. Whew. Who the hell knows? Are they being manipulated, or are the people just incompetent? I would go with both. All right, anyway, so here's our financial sector. This broke its upturn. Now, this is a good study of trends, right? A trend line. A trend line is a subjective thing. You can't really quantify it. People always ask me, like, how many times does a trend line need to be touched to be validated? Those people just don't understand it. It's really just a graphical illustration to kind of help you out. If a market's going up, what's the first thing it needs to do before it goes down? The answer is it needs to stop going up. So the way charts are recorded, I tell people this too, pretend this is the old days and you didn't have a computer and you would just write out your chart analysis on the chart. Well, market's going higher, 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 higher. And then all of a sudden, if it doesn't go higher for a couple of days, it goes sideways, it crosses the trend line. So this is like where the market is saying, hey, pay attention. I'm not going up anymore. There's a good chance I might start to go down. So some pretty, not surprising action over here. And no, you all have done very well. And like I always say, don't send me emails or whatever about like, you had this call, you had that call. The one thing, if you start to get, all right, let me start again. Pride comes before the fall. Once you think you got it figured out, it's over. You might as well just, give your money to a charity because you're going to just lose it in the market. Every day is a new day. And that's a really hard thing for people to deal with, right? Like you had a really good day and then you come in the next day, you're like, oh, I got this all figured out. Or you had a really bad day and you come in, it's like, I'm never going to be good at this. I've seen more people blow up because they had a few good days in a row and they got overly confident than people who have bad days. Because if you have a couple bad days, you start thinking like, what the hell am I doing wrong? If you have a good day or a couple good days and you're new at this and you don't really have control of your emotions, it's like, I got this figured out. This is easy. I could be the next Mario Gabelli. I could be the next Steve Cohen. All right. Anyway, hopefully that helps everybody. NFL starts tomorrow. Patriots are playing. I don't even know who the hell they're playing. I think the Bengals. But all right. Anyway, we'll see you soon, everybody. Thanks for tuning in.